Hey traders, welcome to the global macro update. Like always, we're going to start off with the S&P and then we're going to work our way around the different global indexes that we always cover within our global macro update. So first off, let's look at the S&P or the SPX 500 USD, whatever chart you're looking at to represent the S&P 500. And let's look at it at the daily chart and understand where we currently are. So we had a pretty strong move to the upside 3 days ago. And then yesterday we had a pretty big move to the downside where when we are looking on the smaller time frames, let's say for example the 1 hour, we are making a slow movement of some lower lows and lower highs. So it's not an extremely aggressive push down from the bears. And if we are looking at it from the daily time frame, when we do take a picture of it, give me one moment here, it does show that we have a previous key level of resistance, now going to be a new level of support. So we see a resistance right here, and we see all this zone here, lots of wicks, indicating sell pressure, keeping the price below a certain zone. Now, once this zone did break above with this candle right here, we got a push, exhaustion, push, and then we got the confirmation, previous resistance equals new level of support with this descending zone here, and then we're making our move to the upside. So even with this slight bearish push to the downside here, the overall trend on the daily chart, in my personal opinion, is still to the upside because this key level of resistance is now going to be acting as a strong level of support. Now, if it does break, we got a little bit of a no trade zone right here within this range, because we are still above the ascending zone right here, which is connecting the higher lows, but we're now below this major structural zone right here. So if it goes below here, we could be looking at a potential ascending zone, either breakout to the upside or a failure and a move back down. So that's going to be the two outcomes that I currently see within the market. But right now, we're still moving to the upside. We're holding the previous resistance as a new level of support. So it's looking still more favorable for the longs, for the bulls, for the risk on investments and trades in my personal view, on the daily chart at least. So we can see that this ascending zone, 1, 2, 3, 4, very well respected overall throughout the uptrend. So I'm going to use that as a key trend line. If it does break, will potentially be a shift in trend. So when we do zoom into the 6 hour, we do see there was a bearish engulfing candle here, but it's not crazy, like especially when we move down to the 1 hour. It's not like you're seeing these massive sell-off. It's a sell off and then a little pullback sell off, but you're seeing these nice lower lows and lower highs with a nice rounding bottom there. So it's just consolidating right now. You could draw a nice descending zone connecting the lower highs, which will create a descending triangle pattern where you got a horizontal zone of support and a descending zone of resistance, squeezing the price towards the apex of the structure. And this is a trade that we have edge trading. So let's just get rid of this. So now what are we looking for? Well, we have a nice horizontal zone of support, which is going to be right around here. I'll just make this green, just to indicate that there's a support here. And then we also have a descending zone. So right now on the hour chart, we are squeezing into the previous resistance on the daily chart, as we can see right here, and it's creating a new level of support. So if we're able to squeeze into the apex and move to the upside, breaking the descending resistance, that would be a good indication that we'll potentially continue the trend upward, because right now we haven't broken this key level of support yet, so we cannot validate that this is now in a downtrend. Yes, we have been in a downtrend on a smaller time frame if we're looking at the 15-minute or 1 hour, but in terms of a larger time frame move, we are still squeezing against this support zone, so I cannot say that we are making it move to the downside. So other than that, it just looks like it's definitely continuing its trend here, and we'll look at the other indexes to get a better understanding. But right now, in short, it's looking like it's creating a descending triangle formation that is going to create a potential impulsive move to the upside as long as it's going to hold the support zone at around 31.40. If it breaks below 31.40, we may have to shift our bias, shift our view of the sentiment of the global markets. But right now, It is still within that structure, so I'm not really going to be trying to put too much of a bias on it either to the upside or downside. I'll let it break, I'll let it do its thing, and then I'll make my decision. And then for the Russell 2000 going next, it does look like we could be breaking this ascending zone, which has been very well respected. And we always talk about this structure is we do have a nice head and shoulder structure right here where you have the right shoulder that has been in a consolidation, but still holding the head and shoulder structure. Where in a head and shoulders, you can't break the right shoulder to the upside. That would invalidate the pattern. And that right shoulder high is 1457, 1460, somewhere around there. And then what we would be looking for a breakout to the downside to complete the head and shoulders pattern would be the 1370 zone. If it breaks below that, that's a very risk-off move for the small caps, which is what Russell 2000 index is showing. So we don't see a completion yet. It's like right at the ascending zone, so there's nothing really to do yet. There's nothing really to go off of yet. I'd like to see either a move up or a move down, and then that gives us a little bit more information. So a little quick question on the TikTok. So JUL said, or sorry, EMA said, what about Euro to USD? So we will look at the DXY, which is the US dollar currency index, which is 60% comprised of the euro. So when we do our DXY analysis, inverse my analysis, and that's basically your Euro USD analysis. So we will get into that a little bit later. Also looking at the NASDAQ really quickly, we see that previous resistance hasn't even been tested for a new level of support. We see an ascending wedge that did melt to the upside, breaking the series of higher highs to form a even higher high, and we have a nice support here around 10.5, 10.47K. Let's say 10.5K, which is going to be our new level of support. So as long as it's holding the support and moving to the upside, the risk on sentiment will continue. The NASDAQ's by far the best performing index out of basically anything around the globe. As of right now, it hits all-time high before any other index. So the NASDAQ is going to be the number one thing I'm looking at in terms of the indexes to assess the risk on sentiment for the large stay-at-home companies like the Nvidias, Facebook, Google, Amazon, Microsoft. All those companies are the big companies that are profiting and doing better because of the lockdowns, basically. So, quick talk about the volatility index. It is moving to the upside. I'd like to ideally see it move back down. We got a nice little ascending zone here. You could call it an ascending wedge or an ascending triangle. But we do have a nice ascending zone that is connecting the higher lows. So we got to squeeze this strong level of resistance at $30, and this ascending zone is creating a squeeze within the price action. And I think we will see a move either to the downside or to the upside soon. If it moves to the downside, that is going to be a very risk-on move where global investors are probably looking to add more to the indexes like the S&P, NASDAQ, because there's less volatility, more certainty, and that's a risk-on environment where if you have volatility increase, that is fear, uncertainty, worry. You're most likely going to see sell-offs within the S&P global indexes, and you're going to see a rush to safe havens like, for example, if you're looking in the FX market, you're going to be looking at safe haven currencies like United States dollar, JPY, things that did well during the March liquidation event. Even gold and silver moved to the downside, where the only real assets that moved up when everything was moving down was currencies. So in my view, global investors are viewing the United States dollar, the Japanese yen, more as a safe haven currency than gold and silver right now, in my personal opinion, because we're not in an environment where there's monetary uncertainty. It's more of not really economic uncertainty, but financial uncertainty where stocks are going to go down. And there's no worry of inflation right now, in my personal view. Look at the CPI numbers, right? They're not moving up. We're in a deflation. Velocity is dropping substantially. So the value of the United States dollar, the Japanese yen, the Swiss franc, the euro is going to decrease, or the value of those currencies will increase if the velocity decreases. And right now, globally, the velocity of all currencies are basically decreasing because the economic output, the transactions are lowering because of the lockdowns. People are spending less money. People are closing down their restaurants, bars, shops, entertainment activities, and that's all transacting currency, which is increasing velocity. So if you're closing all these stores and lowering the amount of transactions that are taking place within a certain time frame for a certain unit of currency, that's going to decrease the velocity, which will then create deflationary pressure, which will then obviously be good for currencies that are, the safe haven currencies of the world. So that's a little bit of fundamentals, a little bit carried away, but I do love talking about this stuff. A little bit of water, and then we'll jump right into the next section. All right, so this is going to be the global equities here. We got the top left, which is the Nikkei 225, which is the Japanese stock market index. We got the bottom left, which is ASX, the Australian stock market. Top right, which is going to be the UK FTSE 100. And then the bottom right, which is going to be the DAX, which is the German exchange. We're just going to look at these quickly because they do have very similar structures. Now, they did form a potential descending triangle pattern, a consolidation above a major level of resistance, but it does look like a lot of these indexes are weakening. We see that the ASX is potentially dropping below this ascending zone. We see that the DAX failed to make or even test that 13,000 high that it tested on early June. And we see stuff like the Nikkei 225 not even test the previous high, and it's barely able to make that lower high. So overall, there is definitely a little bit of weakness within the equities market globally. There's not that huge burst of buy pressure where there's a lot of bids coming into the market yet, and I do think that if it does start to move to the downside where we're breaking below the mid-June lows, we can see that on all of these different exchanges. We see that mid-June was the higher low that I'm looking at. If it does break, will create a potential risk-off sentiment, which then stocks would fall, crypto would probably fall, gold and silver might be doing well depending. But currencies like the US dollar, Swiss franc, euro, JPY will be doing well, and things like GBP, Canadian dollar, Australian dollar, New Zealand dollar, and even like the exotics, like ZAR, the South African rand, the Russian ruble, stuff like that, will be doing very poorly as well. But as long as it's slowly still trending to the upside, it's looking favorable. We haven't broken the market structure yet, so that is still not in play. But we're just playing over in our heads the structure of the market and the shift of capital if there is a break in trend in the equities market. We want to try our best to be prepared for the different opportunities that the market presents. And if it continues to the upside, we have something in place. We have ideas for trades that we have so we can capitalize on that opportunity. If it starts breaking to the downside and we have a break in the structure in around mid-June, we have a plan. We have certain assets we look for opportunities to either short or long, or to get some sort of edge in the market that gives us asymmetric risk-reward parameters. That is the goal for us, and we don't see that just yet, but that's what we're looking for in the global markets. All right, so we're going to quickly now look at the US dollar currency index. Someone did ask about this. This is EMA who asked about the Euro USD. So the US dollar currency index is comprised 60% of the euro. There's some GBP, there's some krona. I don't know what else is in there, but it's mainly comprised, it's 60% or more comprised of the euro. So inverse this chart, and this is basically a Euro USD analysis. So when we go to the daily, we see that we had this major symmetrical triangle move to the downside, very strong impulsive push, and then we got a pullback validating a previous zone of significance as a key level of resistance, where we got a double top, really weak second top with lots of wicks to the upside, no real strength to push the price to form a higher high. This created our nice ascending You can call it an ascending wedge or an ascending triangle, but it's a continuation pattern to the downside that I think will continue until a potential key level of support at around 94 gets hit. 94.80 is, I think, where the DXY could go, because this is a great overall move where we see, let's get our brush, impulse move, corrective, and then impulse move. That's a perfect wave, absolutely perfect. So when we do look in the smaller time frames, we were looking at a weakening of the dollar right when we broke this zone and retested this candle right here. Let's get a little, this candle right here was the retest candle that we were looking at. And once that validated and this new candle emerged, we were looking at the dollar for further weakness to the downside. And we got a little bit of a recovery where we were still testing that previous support as a new level of resistance, but we did not get a breakthrough with a type B candle closure above the zone or a type C. It was all closing below the support, which is new resistance, and now we got that initiation to the downside, which is what we're really looking for. Gold and silver spiked as well, which is awesome because we're in silver, so things are playing out according to plan. Usually when the dollar goes down, that is a risk on move, so it's a little bit odd because the SPX is in a particular place where it's not extremely bullish just yet. If it's squeezing, if it breaks to the upside, I think dollar will weaken, but if the SPX drops and overall stock markets go down, I think the DXY will go up. So it's a flow of capital from risk on to risk off. And right now, capital is flowing from a risk off standpoint onto a risk on, where capital is getting injected into equities, crypto, things that are more speculative and will provide a higher ROI, but will have more risk attached to it as well. So definitely still a risk on, but we do have to be a little bit careful here because the SPX, not the ASX, the SPX is consolidating at a support zone, but if it breaks the support zone, we do have to shift our bias. Not a lot of discussion on bonds today. They're just consolidating, not really doing much, so same thing as yesterday. Not a lot to discuss in that realm. All right, so the next thing we're going to be looking at is going to be the gold and silver ratio, and then we're going to look at silver, and then we're going to look at gold, and then we're going to look at silver to finish it off. So let's first look at some gold and silver ratio, and we were looking for this similar structure. Obviously, it's not going to be exactly the same, but what we were looking for after breaking the ascending support right here as well as right here is a continuation push to the downside after retesting a previous support as a new level of resistance. So this current one, this was the previous support that acted as the new level of resistance, and this one, it was a lot shorter and a lot quicker to retest, but we are getting that move to the downside now where we broke that previous support zone right here. This was that previous support zone that was hesitating to break to the downside, and we made a new low, a lower low. So now the trend will continue. So we're making lower lows and lower highs, and I do expect this to move to the downside, which will mean that silver is appreciating at a faster rate compared to gold. So if you had to be in either gold or silver, silver would be the better place to park your capital because it's going to go up faster. Just makes sense, right? So that's what I view with the gold and silver ratio. The next key level of support is the previous low right here at around 95 or 96. High 95s or 96 is going to be the next major zone of demand for the gold and silver ratio, which means that gold could move up a little bit more because in order for this to move down, silver needs to move higher and faster than gold. So now let's look at gold, because gold did move to the upside. We already talked about this ascending wedge that could potentially melt up within the last few days. And once we got this huge bullish candle to break above the zone, all we were looking for is a validation of a previous resistance turned to new support to then say, this is looking very solid for the metals. We really want to be looking to long, and we were already long silver, so we didn't really need to change much because we were already anticipating the blow off top for gold and the strong push to the upside for silver, and that's exactly what we got, which is always a good situation to be in. So right now, gold is making a strong move to the upside. 1900 is going to be the next main zone of supply. So when we zoom all the way back, 1800 was the first key zone, which we broke right around here. This was the $1,800 zone right here. Let's just move it up a little bit. And then this is the $1,900 zone. So we see there's a lot of space before the next major level of supply. It doesn't mean that we're not going to get some hesitation on here. Obviously, I'm sure we will. But with the amount of money that central banks are printing, I do think, that gold and silver will get more bids. Because, for example, the United States is printing like 16% more in money supply in a quarter. So it's unsustainable, and it's the proliferation of currency, and it will inevitably create debasement, and people will have to turn to another asset to store their value. And I think that asset is going to be gold, silver, and crypto. So in that sense, pretty bullish on gold, especially because gold is negatively correlated with the S&P 500. This indicates that it is a risk-off currency, and right now we're consolidating a little bit right now, and I do see that overall we're kind of in a midpoint. It's not extremely risk-off, it's not extremely risk-on, so it makes sense that gold and silver are doing well in my opinion, and that's why we're long. Not a whole lot more to talk about gold. I'm not in gold. Like I said before, I did not enter gold. I was mainly looking at silver because of the gold and silver ratio. And it proved to be a better trade, in my opinion. Very well-respected symmetrical triangle. We entered on the pullback. Got a little bit of hesitation, a little bit of drawdown, but we ended up making a strong push to the upside. Completely removed my risk now. We got the key level of support at around 1832. So that's going to be my new support zone, and I got the stop loss just a little bit above my entry. So now I'm in a completely risk-free trade on silver. If it continues moving to the upside, that's fantastic. I'm making more money. I'm not going to complain at all. That's fantastic. If it moves to the downside, the max I can lose is actually making $1. Sorry, I just got a phone call. I'll close that. But the most I can lose is negative $1, right? Because I set my risk just above my entry, which means that I have not unlimited upside, but I have significant upside with zero downside potential because I have a stop loss, because I am going to close this probably before the weekend. I basically have almost unlimited liquidity, even in nighttime, daytime, whatever the case may be. So I'm in a pretty good spot for the metals market for sure. So that's my view of the overall market for silver, gold, the gold and silver ratio. Western Texas Intermediate hasn't really done a whole lot here. If the daily chart closes above this zone, that would be a little bit significant. And then I think that we could see a potential break, retest, and then a move up to continue this high, higher high, and then a higher high. Because overall risk on sentiment will indicate that WTI Western Texas Intermediate crude oil will be going up, because crude oil is a risk on asset. There's more production, there is more goods being produced, there's more transportation. Usually when economies use more oil, they are increasing GDP, they are increasing production, they are increasing transportation, increasing the overall economic movement, which is positive, right? Compared to a lockdown where there's less driving, less production, less sales, less transactions, not great for oil. So when this is moving up, it's indicating that we are still in a risk-on environment, which it definitely still looks like it is moving to the upside. But it's weakening, but you can't really argue that it's still making moves to the upside, even though it's very minimal. And if it does give us a huge bearish engulfing candle breaking the ascending support, that's going to be something that we do have to take into consideration, but we don't see it. We don't have that in our bias. We're not going to assume that it is going to come into fruition, because we don't have any backtest strategy that's going to say that it is going to drop. That's just a guess if it does. But if it doesn't, if it continues to move to the upside, we're in a pretty good place right now. All right, so that is the completion of the global macro update in terms of the equities, the metals, the bonds, the commodities, and we're now going to go dive a little bit into the crypto space. So let's just quickly see if we got any questions. No questions, so now we're going to go into the crypto space. Let's just keep this on because I'm currently in silver, looking pretty great. And we do have some couple opportunities if the risk on sentiment does continue. So we will see. So now we're going to go into the crypto sphere here. Oops. We're going to go into the daily chart mainly because I still would like to see a consolidation here. Little bit of a break. I don't really want to call this a breakout. I guess on the 6 hour it has broken out on my trend line. You can see that right here. Descending trend line, broke to new highs. Probably going to retest that previous high right here, if not right there, if it kind of draws down a little bit. And if it breaks that high, that would be confirming that it is now in an uptrend. But what I've said before is if Bitcoin is doing well or consolidating, but the altcoin market is rallying, why would you want to be in Bitcoin and potentially going to get a move to the upside after this extremely drawn out consolidation? This isn't great trading structure to me. It's ranging sideways between 8,500 and 10K. You know, you could get a strong move to the upside or downside there, but it's very noisy. It's not really something that's trending that gives me continuation patterns that I have a great edge trading. So instead of trading BTC that is moving to the upside, I can use this as an indicator as well as my global macro update to understand the sentiment for investors and traders around the world, especially in the crypto market, especially if we're in the crypto market trading. We want to know if people are bullish or bearish. Right now, in crypto, people are bullish. Altcoins are rallying. And we don't even need to look at altcoins to understand this. We have two big indicators that we use to assess the health and the potential prosperity of the altcoin market. And what are those two things? First thing, definitely is going to be the total 2. This is the total altcoin market or the total cryptocurrency market excluding Bitcoin. This is a really good way to understand how the overall cryptocurrency market is doing in the altcoins excluding BTC because BTC takes up 65% of the market cap. It is the dominator of the cryptocurrency market. So when you take it away, you have a good understanding of what's left, which is the altcoins. It'd be interesting to see what this would be excluding Ethereum, because Ethereum is obviously a major project that a lot of people are following and have a lot of capital invested in as well. So that's my first thing I look at. And the second thing I look at is going to be the BTC.D, or the BTC dominance chart. So this is going to give you the percentage of Bitcoin's dominance against the entire cryptocurrency market. If Bitcoin is taking more dominance, if Bitcoin BTC.D chart is moving to the upside, that means that Bitcoin is taking more of the market share. And the main times that Bitcoin takes market share is if crypto is in a bear market or consolidation, because Bitcoin will hold its value better than almost every single alt. Not every single alt. There are some alts that prove to have a higher appreciation time frame than BTC in terms of how fast it goes up, and it holds its value better than BTC. Like Link is unbelievable. Link is one of the few coins that I tell everyone it's a fucking awesome opportunity. Looking from it from a technical standpoint, looking at it from a technical standpoint. There's not many alts that all say look phenomenal from a technical standpoint that you should put money in other than BTC. I'm not saying you should put your money in Link. I'm just a random person. But look at the technicals of Link. Look at the structure. Look at the comparison of Link versus all these other alts that you might be interested in. You know, XRP, Dash, TZX, or all these Monero and RIP, like all these different things, Neo and NEM, and a lot of people asking me about a lot of different alts, and a lot of them are pretty shitty, to be completely honest with you. But that's just me. So that's going to be the two charts that we look at for understanding the altcoin market. Quick look at the volatility here. It is still dropping. It's consolidating here a little bit, but I'd like to see the volatility drop even further on BTC in order to get extremely low volatility, which would then breed extremely high volatility. And those are the times where we're going to make those awesome asymmetric risk-reward trades. Like we had back in October 2018, like we had back in April 2019, these moves occur, and this chart is just giving us an understanding of when that next big move may occur. Also, a little bit surprising, we are getting a bit more of interest in the sellers and buyers. This is the BTC longs that are opened from BTC on Bitfinex, and this is the BTC shorts that are open just on Bitfinex. And we can see that shorts are increasing a little bit, buyers are really not doing much, which is a little bit surprising, but you got to consider that this is just one exchange. There's Bybit, Binance, Bitfinex, BitMEX, there's so many different types of exchanges, but it's just good to quickly understand it, and I just had one missing, so I thought I'd put this here. But what's interesting, also, we just have a question here. I'll touch on this question before we dive into another section of the crypto market update. Krusty909 says, any idea what made the XRP rise today? I actually haven't looked at XRP, so we will look at that right now. Quick look at ADA, that is still aggressively moving to the upside. I took a decent amount of my profits here, and I just left the rest to see if it go up higher. It did, which is great. I'm still holding on to the rest of my profits because it does look like it's still going to pump. And this is the time where people say, why didn't you hold on to more of the profit? Why didn't you not sell here, and why didn't you sell at the top here? Well, you never know when there's going to be a top, right? Like you only know when it's a top, and if it's a high, when it starts moving down, and by that time it's too late, right? So I like to set specific targets, not to take 100% of my profit, but to take some profit off the table. I know where a good spot is going to be located in terms of the geometry, in terms of the previous move, in terms of the risk reward that I'm setting myself up for. This was like a 3.4% risk reward, or 3.4 risk reward, which is phenomenal. And then now I'm at like an 8 or like 9 or whatever it is. So overall, great trade for Cardano. Quick look at the different coins here. VT was another one that we looked at on Discord, so we got a nice entry at the completion of the impulse move, breaking the previous resistance right here. We got a nice little pullback, little bit of drawdown, no problem. The stop loss was below the previous low, and then we got our great, phenomenal 27% move. I got 26, so right around 26% move to the upside. I think I entered a little bit lower there, but around 26% move there. And like again, I took a decent amount of profits at the profit I was designed to take it at, and I'm leaving the rest to extend and go on if it is going to move on. But I'd like to secure my wins, especially when there's a strong move to the upside, and take that profit off the table, move the stop loss up. I'm playing with house money. I have zero risk on Cardano and VeChain, and I have significant upside opportunity. And that is a situation every trader wants to be in. So I'm not going to get into more coins, and then this is the Link USDT trade that we were looking at. I did not get an entry because unfortunately I was looking for some level of a retest and then a move to the upside. So on Link, we didn't see any retest, we didn't get an entry. I'm not FOMOing in, I'm not using my emotions to be like, oh my god, it's going up, I have to enter. If it doesn't give me the structure I want, there's always going to be another trade. There's always going to be another setup. Maybe not tomorrow, but the next day, next week, whatever the case may be. So if you don't see that nice entry you're looking for, you just don't enter. Very simple. Hard in practice, but very simple. And if you compare it to things like this, we see small impulse moves to the upside, nice consolidation, previous resistance equals new level of support. This is the completion of the corrective move. We know that this is an impulse move because it broke a major structural zone. After an impulse move, there's a corrective move. We want to enter at the completion of the correction ideally. And that is perfectly what you see right here. Even in ADA, you see a strong impulse move, right? When ADA was all the way up here, I'm not looking to long. I told everyone we want to see it pull back. We want to see the patience, right? We got a pullback. Once we got this wick right here, that was for me the red light, or sorry, the green light to enter. Once it validated this zone. So because Link did not give me any sort of validation of a previous resistance, I did not enter. And yes, I missed out on a phenomenal trade that went up like 30 fucking percent. But hey, this is the setup and this is the structure I use. If it doesn't give me this setup and structure, I do not enter. Simple as that. I did not ever backtest a system where I enter right here. I've never backtested a system like that. So I have zero idea if I'm profitable entering right here. So why in the world would I enter there if I have no idea if I do this trade 100 times, I'm going to make money? So I wouldn't do it. And then this is what a lot of people struggle with is they just see a setup, like they see an ascending triangle. They've never backtested. They have no idea what the stats are. And they just assume that they're going to make money if you do this 10 times. Well, you have no idea, right? You just are completely guessing. You are gambling. And trading is sort of a gambling. It's educated guessing and using probabilities to your advantage. But when you have a number that you can look at and say, if I do this 100 times, I know I'll win, let's say, 55% of the time, and I'll make 2.3 times more when I win than when I lose over a sample size of 100. Well, then you can take this trade 100 times. You might lose this one, you might lose the next one. But you know, over a sample size of 100, you'll probably make money. And I didn't do it, so I didn't take this trade. But I did paper trade and backtest this setup. Symmetrical triangle continuation pattern with the initial massive bullish push that creates the flag, a legit flag on this flagpole where it's not like a trending, it's just literally one move up, you get your flag, and you get a continuation, and the take profit is at the size of the flag. I've backtested the system, and it's profitable, right? That's why I entered here, and it's not because I backtested, I made money. You could not backtest and make money, but it's the reason why I took the trade. Is I know if I do this 100 times, I'm gonna make money, right? And that's the mentality that you have to have when trading. It's not completely random that you enter. It's not, oh my god, it broke some level and it's looking juicy, and my chat room says that it's gonna go down further. I'm gonna short. Like, there's a lot more that goes into it. All right. Gotta protect those profits. 100% SUM. You gotta protect those profits. Gotta raise that stop loss, reduce that risk. And then when you're at a position that you are playing with house money or you have zero risk on the table, then I like to give it a little bit more room, because then when you get those big runners, obviously having those awesome risk rewards is great. But I completely agree. The main objective initially is to effectively try to get that stop loss to a point where you're reducing almost nothing, or you're risking almost nothing, and you have exposure to the intended direction that you want the market to go. SUM, that's what I do. Exactly. Good on you. Jake said, is that XRP? Nope, this is not XRP. But you know what? We can look at XRP. So let's go to this chart. I actually haven't looked at XRP. XRP USDT. Yeah, pretty decent move. Not bad. Got a nice little descending zone. Descending wedge break. Yeah, it's not bad. I would have not traded this. I can guarantee you that. Yeah. Looking for continuation patterns wouldn't be a bad idea if you were looking at XRP. But like I've said many times before, if you're looking at any alt to trade long, it wouldn't be XRP in my personal view. And why is that? Is because XRP is extremely relatively weak compared to almost every single asset. So I'll give you an example. Let's go XRP USD. Sure. So let's just create this into, and it's not even a new line. So let's just compare. All right. In the same time frame, let's do a bunch of different coins, right? Actually, Matic's probably not a good one to look at. What's another one? All right, so I put XRP, Neo, Ethereum, Binance Coin, Monero, and Dash together. So what this is showing is, out of those different altcoins, which one is performing the best since 2019. And we can see out of all of them, BNB is holding its ground better than any other coin. Since the start of 2019, it's up over 159%. On the other hand, XRP is down 50%. If I'm seeing that right. Yeah, 50% from 2019. So we can see XRP is weaker than Dash, XMR, BNB, Ethereum, and NEO. You would make more money putting capital in any of those coins compared to XRP. So my question is, why in the world would you keep money and inject capital in an asset that is depreciating at a faster rate compared to almost any other alt? Like literally, think of an alt and I'll try to compare it with XRP. I find it difficult to find a coin that is shittier than XRP from a technical standpoint. I don't want to shit on Ripple, I don't want to be mean, but so many people ask me about Ripple, and there's a lot of hype around it. I know that they're creating a lot of partnerships, and that's great from a fundamental standpoint, but in terms of technicals, unless something shifts, like you're going to argue, okay, XRP did really well today. Well, every other coin did really well today as well. So comparing one coin to another, XRP is just having a normal day, right? That's the kind of way I look at it. Thank you for waking me up. Yeah, Krusty, this is a really good way to analyze currencies, cryptocurrencies, whatever you want. But yeah, like literally think of any coin that is like super shitty. Dogecoin is freaking mooning. Get the fucking shit, man. That's crazy. There's a whole pump and dump scheme going on in Dogecoin. Don't be affiliated with it. You're probably going to lose money. Literally, they're just telling everyone they can to buy Dogecoin, which will obviously create more bids, which will drive the market up. And there's someone who bought a lot of Dogecoin very low, who will sell their bag near the top, and all these people who are novice traders will get left with holding shit bags. But that's not my responsibility to look after everyone. Krusty, what analysis tool is that? So I use TradingView, which is a free charting platform that allows you to look at basically any single asset. If you are trading, if you are in the financial markets, if you like looking at charts and understanding price action, there is no better place to do that than TradingView. TradingView, in my opinion, is by far, by like 100,000 miles, the best charting platform on this planet. Period. In my view. I've tried many different charting platforms, and TradingView is not even a question the best charting tool I've ever used in my entire life. I do have the pro version, so I do pay a monthly subscription. If you use the free version, you might not get all the things that I get. But if you are getting into trading, TradingView is going to be your best friend, in my view. So it's TradingView. I just use a compare tool. So I compare XRP to NEO, Ethereum, BNB, XMR, and Dash. And I can do that with currencies. I can do that with indexes. So I can compare, let's say, like the SPX versus the NASDAQ. Oh, NASDAQ, no, NDX. NDX. So what I can do is if I get rid of all this, is I can see which one's a better investment. Well, if this is going down, the NASDAQ is a much better investment. And we can see overall the NASDAQ is dropping way, or this chart is dropping, which means the NASDAQ is outperforming the S&P by a long shot. And then we can do, for example, the SPX versus the RUT, the Russell 2000. And we can see in this chart, the NASDAQ, the S&P 500 is outperforming the Russell 2000, right? So comparisons, understanding relative strength and weakness is an extremely, extremely powerful tool to understand what assets are doing well, what assets are not doing well when you're trying to compare them using a fixed variable, which is usually the United States dollar. You could do this with stocks, you could do this with indexes, you could do this with commodities, you could do this with currencies, you could do this with cryptocurrencies, but understanding relative strength and weakness is a vital tool in your toolkit if you are navigating the financial markets, in my personal view. Okay, I'll check it out. Let me know if you have an affiliate code, just in case I'll register. We actually don't. I'm just hyping up TradingView because I absolutely fucking love it. We technically kind of should, if you're looking at it from like a monetizing standpoint, I guess you could think of it in that sense. But yeah, we don't have any affiliate with TradingView. Actually, Ledger, no, we do not. Yeah, we don't have one. Just sign up if you want. It's not super expensive, but yeah, definitely a really, really good thing to understand. Like even if you're doing like Apple, Microsoft, AAPL divided by Microsoft, MSFT, right? What's a better investment, Apple or Microsoft? From purely a technical standpoint, not talking fundamentals at all. From a technical standpoint, we see if this chart's moving up, Apple's beating Microsoft. If this chart is moving down, Microsoft is beating Apple. So since like 2000, since like basically the IPO, Apple has been a better investment than Microsoft by a long shot, right? It was at like, what, let's say 0.1, or let's say 1 here, to like 3.2. So yeah, 3.2 times in your money in, let's say, 3 years. That's crazy. If you're short Microsoft, long Apple. But recently, we're actually seeing Microsoft beat Apple, right? We saw a lower high, lower high, lower high, lower high, lower lows, lower lows. So overall, right now, Microsoft is a better potential investment for the long side than Apple from a technical standpoint. Right? Because you see these lower highs, you connect these lower highs, not going to be perfect, you're going to try to be extremely quick here. You could trade these lower lows like this, and you could argue that this is a major descending triangle, and it'll inevitably break to the upside, where Apple is going to further its, I guess, success compared to Microsoft at certain points. But as of right now, I think, in my opinion, is moving to the downside. But I'm not going to do a million of these, obviously. This is just for an example of how to use relative strength and weakness, how to understand comparing two things together and coming out with a conclusion, what's a better investment or what's a better trade. And if you're looking for like longs, okay, what is trending at a faster rate? So it gives me a higher probability to continue the trend, right? If you have a sideways consolidation and you're expecting it to break out, that's going to be a lower dependability than if you're looking for an already trending pair and you're just looking for continuation patterns. Just makes sense in my opinion. So that's going to be the completion of the global macro update. And for anyone who is in the Performante premium section, which is the subscription that we have that allows us to educate traders, and we do provide information on trades that we are taking for the cryptocurrency market as well as the metals market. Actually, let's quickly look at that right now. So we did call quite a bit of stuff here. Initially, we called the ADA trade right here. We've been calling some good trades on VET right here. And we've been calling some really good trades on some, let's see, silvers right here. This is a silver trade I took right here. Basically, stop entry above 18.11, and I got filled, and this is how it looks currently right now. Oh, sorry, I didn't take that trade. That was an opportunity. 811. Maybe I take that trade on the way back. I was waiting for the pullback, and this is my bad. This is where I long. 18.08. We're looking for the pullback, and that's the pullback. And then what we got now is a strong move up. So we're like way in profit, completely eliminated risk. So we're just playing with house money, and that's always a good opportunity. So thanks for the update. Man, super informative. Got to go. Yeah, no problem. Thank you very much for coming. I'm going to be completing this TikTok live and YouTube live as well. Thank you very much for coming to today's live. We do have these every weekday around the same time, around 10 to noon PST, Pacific Standard Time. So if you are, I know, on like your lunch break or if you have some time off, around this time every weekday. We don't do them on weekends. We do provide market updates for the premium members on weekends, but for weekdays, we just do this Monday to Friday around the same time every day, going over the global macro and the crypto market update and just answering any questions that people have. So thank you very much for watching. I really appreciate it. Hopefully you have a fantastic day, and I hope to see you on the next one. So until next time, have a good one, everyone, and happy trading.